Castrol India, the well-known lubricant manufacturer of the country, has remained on a very slippery slope for most of the recent years when it comes to movement of its share price. The prevailing market price of Castrol India appears at a steep discount to its historical valuation. Castrol's share price was 250 in 2014 and the fall continued through 2017 to 2020, and the fall has been to the extent of almost 50% from 2014 level. The fall has persisted and the current market price is 114. Market capitalization, which was over 19,000 crores in 2017 with a PE of 27.6, has moved downhill to 12,000 odd crores in December 2020 with a PE of 20.9, and the current market capitalization is over 11,000 crores and the PE at the lowest 13.8. It has been a downhill journey over 9 years. The continuous fall in the share price appears to have been precipitated by poor 5-year CAGR of both revenue and profits. Over last 5 years starting 2017, revenue growth registered a 5-year CAGR of 5.9% and the profit growth was lower at a mere 3.3%. Profit percentage also registered a fall, reaching a low of 17.1% as compared to 21.3% of 2019, and EBITDA percentage also reached its low at 23.3%, falling from the peak of 29.7% in 2019. On the whole, an unimpressive performance index. Major reasons behind poor performance were increase in the base oil price, input inflation and foreign exchange fluctuation. Erosion in profitability evident on a quarterly basis starting December 2019 when it peaked 33.7%. It fell down to 27.5% for the quarter of December 2020, and the December 2021 quarter saw a further fall to 24.4%, and the recent December 2022 quarter took it down to 21.3%. EBITDA never recovered over these 12 quarters. While muted growth in volumes and increasing input costs were cutting into company's profitability, the face saver was better realization per unit every year during the last 5 years. For over 5 years, Castrol suffered stagnation of volume around 205 to 210 million liters per annum. Positive was improvement in realization per liter, but the improvement didn't convert into EBITDA, as the revenue improvement of almost 37 rupees per liter between 2019 and 2022 was not helping the EBITDA, which fell by 4 rupees during the period, as the entire realization improvement was eaten up by input inflation. Company's return on capital employed was badly affected by weaker profits. Company's debt plus equity representing capital employed kept on rising year on year, while the earnings before interest and tax remained almost constant at around 1,100 crores. The result was ROCE, which was peaking at over 100% in 2017, reached almost half that by 2020, and it remained at 56.2% in 2022, badly affected by falling profits. Strong operational cash flow but very poor flowback of profits, two contrasting features quite evident from company's cash flow. Strong generations from operations year after year, a major part of it paid off as dividends, and what entered into capital expenditure was around 100 crores on an average, which is just about 12% of operational cash flow, which is not a good sign for growth and expansion. From a shareholder's perspective, the payout was quite liberal and yield quite significant, but it was at the cost of company's growth and expansion. Very generous dividend policy, paying out a major part of profits as dividend year after year, significant amount going as payout, giving attractive yield. The average payout was around 80% and the yield was quite attractive at 4.5% on an average. Castrol is India's well-known manufacturer of lubricants. It has got a distribution network which is the largest in the country. As a major lubricant manufacturer, Castrol ranks only next to Indian Oil and has a market share of around 20%. Castrol's product mix is largely automotive oriented. Its industrial lubricants contribute around 20% of the total. Castrol is endowed with a strong brand equity in the market, which gives it the premium pricing power against its competitors. Among the notable strengths of Castrol, its stable and strong shareholding pattern. Unique feature of shareholding pattern over last 5 quarters is about 75% held by promoters, insurance and banking companies and FPIs. British Petroleum hold 51% as promoters, almost 14% held by insurance companies and banks, and FPIs hold almost 11.5%. Courtesy its strong network, Castrol has a balance sheet which is quite healthy and robust. With about 20% of its profits getting added to equity every year, the equity has been able to maintain a proportion to the total assets, and on an average, the equity of the company funds almost 61% of the total assets, and that is a significant strength when it comes to leveraging. Castrol, with its major emphasis on automobile sector, is having a disruptive change from electric vehicles, and the already muted volume growth is likely to be further contracted with more electric vehicles coming into the market. Castrol has been quite alive and proactive, striking a strategic alliance for supply of lubricants through the retail network of Jio, and that is likely to help Castrol in a big way. Castrol has also entered into a strategic collaboration with the TVS Group by taking a stake in Key Mobility Solutions, which deals with the aftermarket business and provides for supply of lubricants from Castrol. Castrol, being in the forefront of the market, is launching EV fluids for the EV aftermarket, and it is also collaborating with original equipment manufacturers of two-wheeler and four-wheeler electric vehicles. From a positive angle, Castrol has a strong free cash flow, liberal payout, impressive yield, largest distribution network for lubricants, premium pricing power, and effective alliance with Jio and Kim's. On concerns, electric vehicles likely to be quite disruptive in the market, volumes remain subdued, and current market price at a steep discount. Hope this presentation on Castrol was to your liking. I am Vittal Prabhu with the weekly video on Stock Learning Simplified. You can access similar videos at our info card on Stock Learning Simplified. We look forward to your likes, shares and comments. If you are new to the channel, may please subscribe and press the bell icon for timely intimation on our forthcoming videos. Highly obliged for your valuable time and kind support. This video is for purposes of information, education and awareness only. This is not meant to be a solicitation or recommendation to buy, sell or hold securities. Wherever applicable, please seek the advice of a competent professional before taking action of any kind.